too stressed with financial success. Come progress with Premier Group to achieve your financial success.
Hi guys, Rhoda Melvin here from Premier Group. A significant percentage of our services deals with tax planning, business strategies for small businesses, corporations, and partnerships. And I'm sure when most of you hear partnership, you think about two individuals forming a trade or business. You wouldn't be wrong, but today I want to talk about another partnership. In fact, it's a partnership that I refer to as the most powerful partnership ever to be formed, marriage. Today's tax tip is on marriage and taxes. 4 things I want you to consider when planning to get married, and even if you're already married. You want to determine your current tax liability. You want to review your current payroll withholdings if you're a W-2 wage earner. You want to review your prior year returns to determine what type of deductions you were previously entitled to that may change now that you're married. And lastly, give yourself enough time to strategically plan throughout the year how to deal with the current tax liability, anticipated tax liability, or even to take advantage of other tax saving vehicles that may help you once you're married. The first one is determine your current tax liability. The IRS makes it easy for you to do now, and you can log right on to irs.gov and obtain a current tax transcript. You want to get an account transcripts for each year. I would say go back at least 5 or 6 years, and it'll show you if you have a balance due on for a particular year. It'll show you that balance due. Secondly, review your current payroll deductions. There's a payroll calculator that you can use to determine how much you should be having taken out of your paycheck, whether you're weekly, bi-weekly, or monthly. So you want to sit down with your accountant, you and your potential spouse, review your pay stubs, review your Form W-4, and see exactly what you currently have identified for exemptions, because that's going to impact your overall tax being withheld that can be applied to any tax liability at the end of the year. Thirdly, you want to review your prior year tax return. Your prior year tax return gives you so much information. It'll tell you what deductions you were entitled to, what credits you used last year, because what people don't know is your filing status can determine what credits you're entitled to, what deductions you're entitled to. And I'll give you a perfect example. Some people will say, oh, I'll just file married filing separate. If he has issues or she has issues, it won't be my issue. Married filing separate is not the same as filing single. Married filing separate is what we considered when I was an agent as being a penalty status, because some of your credits and other tax deductions will be disallowed or even limited if you file married filing separate. So you want to talk to your accountant about that. And again, give yourself enough time. Right now we're in August and we've started doing our tax consultations with our clients, and we're working on what they can do between August and December 31st to impact the overall tax liability. So you want to give yourself enough time. Not against marriage. Absolutely love the institution of marriage, but you gotta be smart. Planning for marriage is not just about scheduling dance lessons or trip for your honeymoon. It's about making sure that you plan to strategically attack any tax liability that might come about by this partnership. I want to help you do that. Click on the link below and let's get started.